Right, hello and welcome to Camel Finance. I'm your boy Camel, and this is your weekend's deep dive TA and all of that good stuff. Look, as of late yesterday, I had this idea that I would present the inflation stuff that I normally present on the weekend, and that we just spend a little bit more time going through the charts. But then I stumbled across something that I'll give you the spoiler. Okay, QE is probably coming. Now, I was in the camp of people that thought we're probably not going to see QE announced at all-time highs. They don't typically have a history of printing when the stock market is at all-time highs and when Bitcoin is mooning, right? That's typically not how it works. Typically how it works is we have some kind of crash, we have some kind of meltdown, and then they step in, print at the bottom to stop the thing going to zero and prop the whole thing back up, right? That's normally how it works. But something I have known, something I have learned over the years is gold knows something, okay? When gold starts to behave in a manner in which it starts to break out or break down from key levels of significance, okay, that's not nothing. Something I have learned over the years is gold always knows something, okay? And what we saw, as I'm going to get to the charts in a minute, is gold knew something, okay? Gold has broken out, gold has set an early weekly cycle, and like I said, gold always knows something. So the question is, what does gold know? Gold probably knows that QE is coming sooner than anyone was ready for. Today we're going to go through the inflation. I'm going to try not to spend too much time on this because we've done it to death, but even if you decide you can't be bothered with the inflation, you don't care about the charts, please just go to the part about Operation Twist or Operation Reverse Twist. Skip ahead to that because that is probably the most important thing that any trader or investor could be considering at this current moment in time. For everyone else with a longer attention span, okay, let's dig into this straight away. Some time ago, I made this call that we would run the all-time highs from the lows, and I expected to see Bitcoin put in a top significantly ahead of schedule. Fast forward to today, the stock market doing stock market things, Bitcoin is doing Bitcoin things. Very few people got this right in real time. And a large portion of the hypothesis in which I came up with that told me we were going to see the all-time highs run in things like Bitcoin and the stock market was this idea that we had swung from a highly inflationary environment and we were on our way to strong deflation. The main reason I thought we would see this is because anything you do to the M2 rate of change, okay, tends to manifest in the CPI with about an 18-month lag. So we had this move down, sideways, and down in the M2 rate of change. This is a severe snapback following a QE bomb of around 9 trillion through the C19 period. And because anything you do to the M2 rate of change lags in the US CPI by around 18 or 19 months, we have only seen down and a sideways wobble. And I was making the case that we have yet to see the final leg down in CPI manifest because this portion of what we did to M2 has yet to show up in the CPI curve. So, of course, if we're going to have this big drop-off in inflation, I was speculating we would likely even see deflation. And during this, I was expecting not only an early top to coming for Bitcoin, but also, as per my S&P melt-up chart, a rollover, a top, and a deflationary bust. I had been using Trueflation to confirm or disprove my idea. And what we had seen, what we had been tracking in real time for many, many months, is that inflation was indeed falling. Then, when we got to that portion of M2 in the middle, where we had this wobble sideways, we also saw a wobble sideways in inflation. And the consensus in the market was that inflation would be sticky. And I was saying, I highly doubt it because this portion of M2 is yet to present in the CPI data, and thus we should expect a third and final leg down. Of course, using inflation, we have now started to just see, as of the last couple of months, that third and final leg down, allegedly. That was until 2 weeks ago when we got the CPI print and the government reported rate came in at 3.1%, significantly above the 2 handle I was expecting for us to see. So this begs the question, okay, is my analysis wrong? Is Trueflation wrong? Is the government data made up? Is it a combination of all of these things? The only conclusion I can fairly draw is that we need to see more inflation data. We need to wait another 2 weeks to see what the next CPI print is, if indeed this is anywhere close to reality. Then the next CPI print that is due in around 2 weeks' time should have a 2 on the front of it for the government reported rate. If indeed we do start to see inflation start to come down rapidly, then all of this would make sense. All of this would continue to confirm that I had been correct in my examination, in my analysis, in my assessment of what was going on with M2 rate of change. And indeed, we would have to be open to seeing a global deflationary bust and a recession. Because if we are indeed going to slip into deflation, this is exactly what happened in 2008. However, this time with far more leverage in the system, we could be looking at a significantly larger decline and larger demand-destroying event than what we saw during 2008. just to be really clear, I'm still calling for a blow off top. I'm still calling for new highs across all risk assets first. This is not me being bearish. This is simply me saying, typically speaking, whatever you do to the M2 rate of change shows up later in life, okay? Everyone tends to look at the hard right edge in this neighborhood and say, oh, look, inflation is creeping up again. But the truth is, we have yet to see this portion of the curve manifest. So that's my idea for inflation. Okay, we need to get 2 weeks into the future so we can see whether or not we've got a 2 handle on the US government reported CPI rate. And if we do, then it begs the question, doesn't it? Are we going to continue to see trueflation guide us lower and lower? And is that government reported rate going to continue to fall until eventually we do get to deflation? Once we get to deflation, we should have that global deflationary bust as I've been talking about. And of course, if that is the case, then we are going to have to deal with that. It's also important to note that the Fed has been talking about this 2% goal for inflation and using it as a yardstick to determine whether or not interest rates should be held at a more restrictive level, or whether they can start to think about pivoting from a pause in interest rates to cuts in interest rates. Of course, if inflation does indeed start to come down and we do start to see a 2 handle at the front, the Fed will have much more, and I say this sarcastically, credibility in saying that it is confident it has tamed inflation. It can start to consider lowering interest rates. And based on historical data, when the Fed starts to lower interest rates, particularly with a backdrop of deflation, we typically see the stock market and risk assets top within 0 to 2 months of the onset of that cutting cycle. So again, all of this feeds back into this idea that we're going to have this big blow off top whilst people think everything's fine. And then, if indeed we do slip into deflation, we should expect to see this bust. And as you can see up here, do they cut here? Are they forced to cut here as a way of trying to save this thing from tumbling? As it stands right now, with the idea that inflation is above my expected level and still on a 3 handle, you can see that out to March, we are expecting no rate cuts. Clicking out to May's meeting, we are still expecting to be paused. And clicking out to June, there is around a 36-37% probability that we're also going to be paused in June. As it stands right now, there seems to be no rate cuts on the table until at least July. And of course, if we were to get one more hotter print in the next 2 weeks, it is likely that this is going to be pushed out even further. So all eyes on the inflation print in 2 weeks' time. Like I said, if it's got a 2 in it, we should expect to see cuts put back on the table for perhaps May. And if CPI continues to be sticky around 3 or 2.9, then of course we can expect higher for longer. And that also means the stock market will have the room to rally for longer as well. So now, here is where it gets super, super interesting. We have seen credit spreads compressing ever since the middle of 2022. And you can see at the hard right edge, this looks nothing like a financially stressed condition or a meltdown. But what we do know is volatility compression precedes volatility expansion, telling us to keep an open mind about seeing a expansive phase sometime in the not too distant future. That also, remember, feeds into this idea that there may be some darkness coming soon after the light. It's also worth noting that the bank term funding program, okay, this is QE disguised as a loan program. This is lending the banks money and using it to plug the holes in the system that are only there because the Fed told the banks to buy bonds under the pretense that it promised it would not raise rates. And then, of course, it did embark on the most aggressive, fastest rate hiking cycle the world has ever seen. Of course, when you raise the rates, the bonds fall into unrealized losses and create real problems on the balance sheet for the banks. It is of note here, M2 is what? M2 is deposit. When we see this in a severe downtrend, in a severe snapback like this, this speaks to deposits leaving the banks. The problem with deposits leaving the banks is it reveals that whilst they're marking their bonds on a held to maturity basis, deposit flight forces banks to realize the unrealized losses, and it forces them to mark to market the bonds, thus revealing that they have indeed got holes in their balance sheet. This is why we have seen the bank term funding program need to come in and plug the holes from the deposit flight and plug the holes from the balance sheet because of these unrealized losses from the bonds. Note, this is from December of 2022. Back here, we were at 120k just over for the BTFP. How does it look today? We are at north of 160k. So this continues to need to plug the holes in the banking system because of that deposit flight and because of the more restrictive interest rate policy forcing those bonds into unrealized losses, remember. So observable stress is in the system. And what's worse is the BTFP, this QE disguised as a loan program that is there to bail out the banks and plug the holes in their balance sheet, is set to end in a couple of weeks' time. This begs one of two questions, doesn't it? Do they, one, roll this thing over? Do they extend the program? Do they replace it with something under a slightly different name and continue to run this thing hot, continue to kick the can down the road? Or two, do they pull the loan program? Does this end up causing a systemic collapse of banks? And in hindsight, will we be able to look back at this and say that seemed like a pretty engineered, deliberate, controlled demolition in order to usher in CBDCs? And this leads me nicely on to what I was saying at the beginning of the video, which is gold always knows something. When gold puts in a super strong and sneaky move, showing strong signs of a new weekly cycle that has showed up slightly early, typically speaking, gold knows something. The big question is, what does gold know here? Okay, it knows something, it always knows something. Gold does not make moves like this, it does not force early cycle lows unless it knows something. Here is another look at the gold chart. Okay, you can see this range at the top connecting all of the prior all-time highs, disregarding this wick, and because this was a very quick stop run, you can see we are closing or attempting to close at fresh new closing all-time highs. Like I was saying, we apparently have forced an early weekly cycle low for gold, which tells me my idea about gold rolling over one more time is incorrect, and that's fine because it's not about being right or wrong, it's about staying on the right side of the trade. So I don't care about being right or wrong, I just want to be making sure I capture the moves. And if gold is going to break out above new all-time highs, the OGs will know I've been very consistent in saying that would be the trigger for me to get long. So with gold likely forcing an early weekly cycle, I think it's time to get long gold as of next week for me personally. I also think these daily cycles are probably going to form above the all-time high level. And I think conservatively, we're going to be targeting around 2,300 for gold. I think we could even see as high as 24, 25 or 2,600 if things start to go in the direction I think they go. So with all that said, okay, we're going to come back and do the TA. Why is it then that gold is forcing an early weekly cycle? Like I said, what is it that gold knows? Gold seems to know that Operation Reverse Twist is potentially brewing. I wonder if this reverse twist is what is going to be played after the expiry of the bank term funding program that is due around the 11th of March. For those of you that know your market history, something happened back here, September 2011, that marks the absolute top in gold for many, many, many years to come. What happened right here was something known as Operation Twist. Operation Twist is selling short-term treasuries and buying the long end, okay? Buying long-term treasuries, selling short-term treasuries. Fast forward to today, and they are now talking about Operation Reverse Twist, meaning they are going to buy the short end and sell the long end. This, again, is a new form of QE that is, once again, not going to identify as QE, okay? For some reason, we live in this weird world where nothing gets to identify for what it is anymore. But this, make no mistake about it, just like we had QE disguised as a loan program in the form of the bank term funding program, we now have, potentially just about to be launched, Operation Reverse Twist, which is QE that identifies as a bond buying program. So again, just like what we saw was them selling the short end and buying the long end that topped the gold market back in 2011, what we are now potentially looking at is them buying the short end and selling the long end, which would steepen the yield curve even further. They will of course not call Operation Reverse Twist by its proper name QE, because that would reignite animal spirits further and put the Fed in an awkward position of buying short-term bonds at the same time that it's hiking interest rates. They are also talking about it likely being appropriate to start slowing the pace at which they shrink their balance sheet, so tapering QT, and all of this is promptly timed just at the pace of the reverse repo erosion, which is set to accelerate after month end, right as that bank term funding program facility is set to expire. So you can see the reverse repo being drained. So we can see this sending yields lower, especially in the short end. We can also see the steepening in the yield curve. And most notably, we are seeing gold accelerating higher. Why? Because it goes back to what I was saying, gold always knows something. All of this begs the question, doesn't it? Are we going to get this QE reverse twist? Are they going to print without having a meltdown or a crash first? Of course, if they are going to print, then does that steer us away from deflation? I would argue that we're still going to have a snapback, right? Because anything you do up in this neighborhood, okay, anything you do to MT rate of change does have to show up later in life. So even if they're to start printing this into oblivion, even if we start to get a QE reverse twist show up, we would still have to expect this portion here to show up first, right? Followed by a massive QE bomb. But the key point here is, one, gold seems to know that this is coming. And like I said, if there's one thing you should take note of, it's that gold tends to know something is happening. It also, if you think about it, makes perfect sense from a Bitcoin perspective. Bitcoin is the king at sniffing out freshly printed money. okay? Bitcoin is the black hole for liquidity. And look at the Bitcoin chart. It is well on its way to that left translated cycle top. It is well on its way to breaking an all-time high in the next week or two, which would be 6 to 8 months ahead of schedule relative to any other past cycle. So is that what we're seeing? Are we seeing Bitcoin and gold sniff out this operation reverse twist, which of course is QE, or said another way, printing money and using it to buoy the system? And if any of this is true, then nobody is bullish enough, okay? If we go back to this melt-up chart, right here, I've said that the next round of printing is likely going to be 10 or 20 trillion. For reference, we did about 9 trillion in C19. So all of that move from Bitcoin and the stock market off the lows to their fresh highs was driven by 9 trillion of QE. Now remember, with QE and the Fed, it's like a drug addict. Every time they print, they need to have more and more to get the same net effect. So there's no chance that we only do 5, 6, 9 trillion of QE this time around. The minimum they're going to do is 10, and it's most probably going to be closer to 20 trillion for this QE bomb. If that is the case, absolutely everything is going to reprice higher. Bitcoin is going to be blowing through every single target anyone has, and gold is finally going to make that generational run that the gold and silver bugs have been waiting for a very, very, very long time. Now, it's important to point out, once we do this, okay, once we get up into this neighborhood, those dollars are not going to be the same dollars as when we took off from down here, right? And the same is true of Bitcoin. We could well see an insane valuation for Bitcoin, and it will not be the same dollars as today's dollars. But one thing I know is if gold's going to break out from all-time highs and enter price discovery, if Bitcoin is also going to break out of all-time highs and enter price discovery, right as the stock market is already in the midst of price discovery. And with all of that said, they're about to launch Operation Reverse Twist, a QE bomb, more printing, more fiat debasement, then absolutely everything is going higher. So, as you can see, based on everything I've presented today, we need to keep a very, very close eye on the CPI data coming out in 2 weeks. If we start to swing towards deflation, we can continue to accept the primary hypothesis. If that's the case, then a deflationary bust is likely coming. Now, I wonder if that deflationary bust comes with bank failures and then they launch Operation Reverse Twist to print us out of the bottom. And then from there, does that present a generational buying opportunity that sends us way, way, way higher? Or do we have some kind of huge meltdown and even the printers can't save us, right? As ever, one day at a time. For now, I continue to stick to my base case, which is that this is not wrong. And the reason is we have not yet invalidated it. However, as I was saying, if indeed they are going to throw a spanner in the works here, if indeed new data is going to present, if indeed they are going to start to print, even with everything at all-time highs, then all bets are off, right? What am I supposed to do? Be dogmatic with my approach and say, no, I must be right. No. If they really are going to print, then I have to be ready to adjust to that. So based on everything I've shown you today, some very, very wise words here from Mark. In the stock market or financial assets in general, everyone starts in kindergarten. You have to earn your way to the top. You have to be patient with yourself. Your college degree or the fact that you're smart or a doctor or an engineer or a lawyer means absolutely nothing in the world of professional speculation. In fact, if you aren't willing to let go of your ego and strong opinions, it's going to hurt you. So you have to be open to all options, okay? It doesn't matter what your base case hypothesis is. It doesn't matter if you subscribe to a deflationary bust. It doesn't matter if you think a recession's coming. It doesn't matter if you think a recession isn't coming. It doesn't matter if you think that they're going to run this thing hot, the number goes up forever, okay, and there's no more 4-year cycle. It doesn't matter, right? It does not matter what your idea is or what your hypothesis is. What matters is that you completely forego the need or the requirement to be right or wrong, and you're just interested in entertaining all possible outcomes. You're only interested in staying on the right side of the trade, just like I am demonstrating here with gold. People that have been watching the channel for a while, you know I have been waiting to short gold for weeks and weeks and weeks, only for the market to prove me wrong, okay? Now, I can either allow this to offend my ego, I can either sit here and be mad at myself that I was wrong, or I can just say, fine, the market has shown me I was wrong, it's shown me where to correct my move, and we are now looking for higher prices out of gold. We're now looking to go long and capture potentially the Operation Reverse Twist. So with all of that said, let's get into some charts in no particular order, okay? The stock market has indeed confirmed a new cycle. We were saying this last week, okay? We're going to get one or two scenarios. Either we're going to get a rollover and confirm a normal cycle, or we're going to force one early. We, of course, have forced one early, as you can see right here. We are indeed late in the weekly cycle, but again, this seems to be speaking to higher for longer because of that inevitable fiat debasement that is on its way. So whilst we scaled out, whilst we took some profit off of the S&P and the NASDAQ, having captured all of this move right here, Fortunately, we managed to leave a Dow Jones position, which we continue to push until violation of the upward sloping red support line, and the Russell 2K position, which, as you can see, breadth is beginning to widen. Okay, we're starting to see small cap participation. This is what we wanted to see. So long and strong continue to push there. If we can get some nice setups from the stock market, then I'll be willing to add some positions, but I'm not going to go chasing this because we should be expecting this current daily cycle to left translate before we get that rollover into the weekly cycle. If it continues to just scream higher into a parabolic bow off top, well, at least we have the Dow and the Russell, and we've got plenty of capital for adding to other assets as and when we see fit. Something else that could fuel this big upside rally across the board is the DXY continuing to break down. So we are due potentially a 3-year cycle low. If, however, we are to reverse from here and break out, then we will have to confirm that that right there is indeed the 3-year cycle low. For now, I stand with my base case and expect this thing to continue to come off, particularly if we can get a colder CPI print in 2 weeks' time. As I said with gold, I'm going to be looking for longs, and probably once we get to this daily cycle, so if we can get something like this, right, a breakout, a retest into that daily cycle low and a resumption in that neighborhood, I'll be interested in adding to silver and perhaps the gold miners. In fact, let's check on the gold miners now. You can see there's no rush, okay? There's no rush. If I zoom right out, there's no rush for the miners. They've still got plenty of work to do before we can get even an early entry signal, or if we're going to play this more safely, we'd want to go for the outside line. Same is true of the junior miners, right? They've got some work to do before they're ready to break out. That kind of makes sense. So we get a push up, pull back into that daily cycle low for gold, and then we can start to resume out of here. So there's going to be some nice opportunities, but the time is not yet. Oil, I've been saying consistently I wanted to see this thing roll over, and if it did, we would be entertaining a short. But I said, if it continues to just do this and blast off, then I'm flat wrong and we'll stay out the way of it. It seems to be that this is not going to be playing out at the moment, so we will see, right? Here's VNQ, my housing market short. We are right into a key level of significance, as you can see, right back into resistance. So if, of course, we're going to break out here, then we've got an invalidation for the trade. Okay, the trade is we're no longer contained under resistance and we're going to continue to move higher. If that's the case, then we'll cut the short and perhaps even flip long here on a breakout. Okay, so that's one idea. The other idea is if this indeed does what I expect it to, which is reject a resistance and roll over and continue to the downside, then not only will we continue to push the short, but we will move the stop loss from here where it is now to break even, because again, if we've rejected resistance, that should form the new swing high. So right back to break even. We'll see. Worst case scenario, it breaks out on a daily closing basis and we just cut this trade for a tiny little loss, right? Best case scenario, we roll over one more time, continue to push the short and choke the stop up so it becomes a free trade. Bitcoin doing Bitcoin things, apparently sniffing out that reverse QE twist. Not much more to say apart from with the cycle awareness, we are due a pullback into a half cycle low. It doesn't have to be very deep, but we are due one around the 8th, 9th, 10th of March. And then from there, the next time for me to be adding positions and loading up will likely be around the 7th of April, give or take 6 days. If this fractal continues to play out, it suggests that we could perhaps run all the way to 90k before a significant pullback. Interestingly enough, this low right here would be right in the timing window to qualify for a 60-day cycle low. So I think if we do just blast straight up to 90k with no pullback, I'll be interested in drawing a third angle, taking some profit off the trades there and then reloading around 30-40% lower down into that 60-day cycle low. Perhaps then what we'll get is a final push off, and indeed if we do break down as a left translated cycle top, I will be looking to offload a significant portion of my Bitcoin on that trendline break. In terms of the crypto-related equities, okay, they continue to push higher. I continue to just want to not ruin my chances here at capturing the bulk of this move. I want to give them the space to do what they need to do and even entertain adding one final load as we get into that next 60-day cycle low time frame for Bitcoin. MicroStrategy pushing up incredibly close to all-time highs. So again, if this trend breaks down, there's a short-term opportunity to take some off the table, ready to reload into that next 60-day cycle, or indeed we could continue to push the trade. Since we are so close to all-time highs, I probably will be taking some off since this has been an absolutely monster trade from our original entry. Riot showing some relative weakness. Is this going to continue higher? That's to be determined. I wonder what Riot knows, if anything, or is this just lagging behind as I showed earlier on in the week? And Marathon, I'm actually looking to add a position if we can get there. So we will see. Can we get maybe one more pullback to a touch of this support line and then bounce? And if we can, I will add a position there. Of course, if you're a member, I will notify you in the members section. XRP, this out-of-pocket trade that I took, when did I take this? All the way back around the 29th of September, okay? Kind of took this, forgot about it, almost got stopped out a couple of times. At the hard right edge, is that or is that not breaking out? So I know quite a few of you asked me about XRP. I'm not really into altcoins, but this is one I've got. and we took the trade. It seems to be breaking out. So I wonder if that is significant or whether it's just going to continue to do what XRP usually does, which is disappoint the masses. We will find out, right? We'll find out soon enough. So the plan for next week, as I said, is we're going to be looking to long gold. We are also going to be looking to add to Marathon if possible, perhaps out of that half cycle low for Bitcoin. We are also going to potentially be looking to add some exposure to the stock market. But I know a lot of people that aren't familiar with cycles have problems trusting them. And I understand that. But if you've seen as many cycles, if you've traded as many cycles as I have, then it's much easier to trust in these cycles. And these cycles are telling me, and my experience is telling me, that even if this thing does push up significantly higher, it is going to left translate and roll over into that weekly cycle low. And whenever that weekly cycle low comes, that gives me an ultra high probability setup to get long and strong and go back to full exposure. So we've done really well at capturing the bulk of this move. Like I said, we've still got some exposure. But if this thing really is going to enter parabolic up only phase, then it would be nice to capture that final little bit across the NASDAQ and the S&P, as well as the Dow and the Russell. So if you made it this far, pat yourself on the back, because one, my voice is probably a bit boring. I know some of you have been calling me a Minecraft voice, whatever that means. But yeah, pat yourself on the back if you're putting in the work, okay? Pat yourself on the back if you give up however many minutes. This must be about half hour at least, this video. So well done if you made it this far, if you've heard what I had to say, if you've considered the inflation argument with a deflationary bust and a recession, if you've also made it this far, then you will have considered Operation Reverse Twist and a QE bomb that comes out of nowhere to prop everything up and run it back turbo. So yeah, if you made it this far, comment I put in the work, pat yourself on the back, continue to work hard, and God will do his thing and reward you for your hard work, of course. In the meantime, if you're a level 3 member, look out for the members only video. It's going to be coming a little bit later on today, where of course we'll be doing a deep dive on the members only stocks and particularly an extra deep dive on the crypto related equities and miners. For everybody else, I hope you have a fantastic weekend. I hope you're doing well in life. And until next time, take care from me. All the best. Cheers. Bye.